Hey guys, welcome back to my channel. I hope you are staying safe and strong. So in this video, I'm going to explain about what are the main criteria that needs to be considered while buying a particular stock. So as we know that there are three parameters that need to be considered. So the first is the balance sheet, second is the income statement, and the third is the cash flow statement that need to be analyzed when you start picking up the stock. But what happens is that in the beginners or in the initial stage, there are certain difficulties that beginners find because they don't know how to read a balance sheet. But don't worry, in this video I am going to explain you in details that how to read a balance statement of a particular company and what are the facts and figures that need to be analyzed while picking up a stock so that you can get a maximum benefit out of it. So if you are new to this channel, I would like to explain that I am a Canadian investor and I used WealthSimple Trader as a platform to invest my money in stock market, and on a weekly basis I invest some money so that my money grow in a more optimized manner. And if you are new to this journey, I would strongly recommend you to subscribe to this channel and stick to this video till the end to get the maximum benefit out of it. So let's get into my laptop and let the journey begins. The website that I used to analyze the balance sheet of a particular company is Yahoo Finance. So I will take the example of two companies basically. So the first one will be Air Canada and the second one will be Google. And we will compare both of the companies' balance sheets side by side, and we will differentiate that how these two companies are growing and what are the things that need to be considered in the balance sheet of both the companies. So first we will go with the Air Canada. So let's type here Air Canada. So if you can see on the Toronto Stock Exchange, the ticker symbol is AC.TO. So I will select this and it will bring me to the stock page of the company. So currently the stock price of the Air Canada is $22.77. So we will go into the financial tab, and there it's giving me three tabs basically. So the first one is the income statement, second is the balance sheet, and the third is the cash flow. But we are interested in the balance sheet. So let's quickly get into it. And all right, so in the balance sheet there are two terms basically. So the first one is the assets and the second one is the liabilities. And in assets there are current assets and non-current assets. What does that mean? So current assets are basically the assets that the company company is in the power to cash those assets in a period of 12 months. In terms of Air Canada, we can see that the cash and cash equivalents come out to be near about $2 billion. One more thing to consider, all numbers are in thousands. So the cash that Air Canada holds now is $2 billion near about. And then we have net receivables. This is the second term, which means that the money that the company is going to have in future. All right, so this is the money that the company owes from its different debtors basically. That means the price that the company will receive in the future. So that position holds near about $926,000. Then we have the inventory. So when it comes to Air Canada, so the inventory is basically the airplanes and the parts of the planes, or we can say the fuel which is being used by the planes. So that total come out to be $212,000. So combining or the summation of all these current assets come out to be $7.5 billion. Then we come to non-current assets. Okay, so the non-current assets, there are two main parameters that needs to be considered under this criteria is the goodwill and the intangible assets. So these two assets as termed by the soft assets, and Warren Buffett also said that these two assets are, these are the soft assets basically, which don't have any monetary value, but yes, they are one of the main essential parameters when you want to consider the profile of a company. So what is a goodwill? So if we go into the Investopedia, this is the definition of goodwill. So goodwill is an intangible asset that is associated with the purchase of one company by another. Specifically, goodwill is a portion of the purchase price that is higher than the sum of the net fair value of all of the assets purchased in the acquisition and the liabilities assumed in the process. The value of a company brand name, solid customer base, good customer relations, good employee relations, and the proprietary technology represents some reasons why goodwill exists. So basically, the position of the company in the corporate world in terms of good relation, good employee relation, good customer relation, a solid customer base is all about the goodwill thing. Second, we have intangible assets. Again, this is a soft asset, we can say, and this terms mainly incline towards the brand value. For example, if you take example of Coca-Cola or Nike or Adidas, they have certain brand values. Similarly, Air Canada is also having a brand value. So that's come out to be near about $10 billion. So combining all the current assets and the non-current assets, basically the total summation comes out to be $27 billion, which is a decent amount, I can say. Then coming to the liability tab. Now what does that liability means? Liability means that a certain portion of money that the company owes, and the company has to pay that money back to the creditors in a specific period of time. So current debt, that means the company has to pay these amount in the next 12 months. Then we have accounts payable. Accounts payable is also the amount that is the company own to its creditor and has to be paid. Then there is a term of deferred revenue. Now what does this deferred revenue means? It means it is also known as unearned revenue, refer to advance payment a company receive for product or services that are to be delivered or performed in the future. The company that received the prepayment records the amount as deferred revenue, a liability on its balance sheet. In case of Air Canada, it means that the company may have booked some planes that has to be used or will be used in the future purpose, but haven't been utilized in the business as of now. That means none of its customer has used the planes that they have pre-booked, right? So this is the deferred revenue. So these are some of the main parameters in the liability terms. So one more criteria to mention here is that there is also a tab of non-current liabilities in which we have long-term debt and deferred tax liability, deferred revenues. So these all liabilities have, it's not compulsory that companies need to repay these liabilities in a period of 12 months. But in case of current liabilities, the company has to pay these liabilities, within the next year. So this is the main difference between the current liability and the non-current liability. Then we come to stockholders equity. So the main we can see that there is a term total stockholder equity. So how does this figure calculated? This is calculated basically when we have total assets minus total liability. So this number should be growing on a yearly basis. So if this number is not growing, that you need to be have to concern about the company, that because this number should be growing on a annual basis. So let me show you how this number is calculated. We have over here, we can see that there are total assets of 27,759. Then if we subtract this from total liabilities, that is 23,359. 23,359. We get the figure of 4400. So this is the figure that I was talking about. So this is the total stockholders equity. So this should be increasing on a yearly basis. All right. And one more, in addition to this, there is a ratio which is known as the assets to liability ratio. And in a stock market, it is generally known that while picking up a stock, that this ratio should be greater than 1. But in case of Air Canada, we can see that total current assets, the amount of total current assets is 6516000. If we divide this by total current liabilities, that is 7775000, it comes out to be 0.96666, which means it is less than 1. And if the ratio is less than 1, then for me as an investor, I don't put my money into such companies, because I don't think the company can grow that much faster as compared to some other companies who have an asset to liability ratios much more than 1. So this is the point that needs to be considered while picking up a stock. If we go into this tab, we can see that on an annual basis, the revenue is growing on a pretty good pace. But if we go into the earning ratio, it is saying that on 2016 it was 876 million, then on 17 it was 2 billion, then on 18 it got a huge dip and comes to 37 million, which is not good. It has to be increasing in a certain manner. If we consider on a quarterly basis, we can see the revenue is dipping on a constant rate, right? It's like firstly it was 437 billion, then it was 372 billion, then it take a huge dip and comes to 527 million, so which is not a good sign for a company. And coming to earning, it was 152 million in the fourth quarter of 2019, then on the first quarter of 2020 it comes out to be minus 1 billion, which is, again, as you can see, the graphs is going in an opposite direction, which is not good. So these are some of the parameters that beginners have to see when investing in stocks or a particular company. Second more important point is that we need to see how the company is growing on a yearly basis. Okay, so if we consider the total cash for Air Canada in 2017, we can see that in 2017 it was 5.2 billion total current cash assets. Then in 2018 it was come out to be 6.3 billion, and in 2019 it come out to be 7.5 billion, which is increasing, which is pretty good. But this is not the only criteria that needs to be followed while picking up a stock. Okay, and if we can see that as par with the assets, liabilities are growing at a rapid pace. So in 17 it was near about 5 billion, again it was near about 5 billion, then it jumps to 7.7 billion, which is a good hike in the liabilities term. So if the liabilities are increasing and the assets are decreasing, or the cash is decreasing, that means the company in the future will struggle. So this is all about the financial statement of Air Canada. Let's quickly go into the stock of Google now. So if we type Google, there is a ticker symbol of GOOG, and it's trading at about 1751 and 88 cents as of now. So if we go into the balance sheet of Google, we can see that the total cash, see guys, this is the balance sheet that I was talking about. In 2017 the total cash is 101 billion, which is damn huge. In 18 it comes out to be 109 billion, and in 2019 it comes out to be 119 billion. You see the growth of the company and you can evaluate it. Okay, and I'm not saying that liabilities are not increasing. If we go to the liability tab, we can see that the liabilities are also increasing. Like it is 44 billion in 17, 55 in 18, and 74 billion in 19. And if we compare the ratio that I was talking about, Okay, let's calculate the ratio thing. So we have here current assets. So we consider this term 152,578. All right, 000 divided by, we are considering the year 2019, by total current liability, that is 45,221,000. See guys, in case of Air Canada, it was coming out near about 0.9, which is less than 1. But in case of Google, it is coming out to be 3.37. What does that mean? It means that if the company stops right away, or if a market falls in a very if there is a market crash, then these such kind of companies have the stability to give the stakeholders back even during the time of recession, and they have that buffer with their finance team, that they have the ability to bear the crash of the market, and they have the stability to retain in the market for a long term. So if you want to be an investor, you have to pick such companies which can be give you a fruitful return in the long term and which are very less risky, and Google is one such example of it. As you can see, the total stock equity is also increasing in a very nice fashion in a on annual basis, so which is also good. That means the assets are more and the liabilities are less. If we come to the graph, we can see a nice graph which is in upward trending fashion, and the revenues is earning is also increasing in a very nice fashion, right? So quarterly also there is a dip in earning, but you can see this is just because of the coronavirus crash thing. But again, after the second quarter, it takes a huge jump, and now it's par with the fourth quarter of 2019, and it's back in the market. So I would strongly recommend, if you like this video, do press the subscribe button and do share the video with your friends. Till then, goodbye, stay safe.